Hey traders and investors, it's Serge Berger here. Today we're going to have a look at gold. I got a lot of questions on gold over the past couple of days, particularly this morning, and my good friend Todd and I were just looking at the chart of gold together, and basically, and I've been saying this for now a couple of months. The dip buying mentality in gold isn't really going to work until it works, and particularly in terms of the GLD, which we're looking at right here. Basically doesn't work until we're breaking past the confluence zones of the three medium term moving average, the 50 in yellow, the blue the 100 blue and the 200 day in red. So, and basically today so far we're breaking through that with a lot of force. And I'm just looking at the GLD. We can have a look at the silver market too. Just looking at the SLV, and this thing too you can see is ramping higher. But the beautiful thing in gold, and to be honest with you, the GLD has been a very difficult thing to trade from where I sit. But we're seeing we're today finally seeing a good move to the upside. Part of that may be a reaction to yesterday's basically perfect statement from Janet Yellen. But beyond that, basically, it's the price action that counts for those of us that are a bit more active in terms of activity. So what's the thing to do here? Basically, we can look at gold instead of just draw this basic Fibonacci kind of stuff off of the lows, and you can see that didn't work either. So basically, the rally off of the January lows retraced more than 61.8%, which for those of us that follow the Fibonacci stuff, basically would have been a broken trend and then it reversed. So it just goes to the point how difficult this thing has been to trade. It's really this kind of stuff you really want to trade on momentum that you then sort of hope to see follow through buying. So from my point of view, a higher low, forgetting the Fibonacci retracement from a higher low and a very clean break to the upside today, probably makes this finally something that I'm going to be interested in playing from the long side. And this is stuff that I'm going to be discussing with subscribers today. I do think gold may finally be at a point where we're good for a summer rally. If you look at the commodity complex via the DJP ETF, you can see basically that's seeing a beautiful rally too. Of course, the inverse of that is the dollar, which is getting hammered once more today. And again, that's just I think a late reaction or a continuation reaction to yesterday's continuing dovish statement from our dear Federal Reserve. So from that point of view, gold, to me, it looks like you have a really good stop against basically yesterday's closing levels on the GLD, something like 122.70, 122.75 to lean against on the long side. Really upside here should at least work down or up to the March high. So hope this makes sense at all. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care, and I'll see you in the next video.